and welcome to Startup Street. I'm Ritu Singh and with me is Shruti Mishra. Here are the top headlines from the startup space. Elon Musk will be visiting India on the 21st and 22nd of April, likely to announce an investment plan worth $2 to $3 billion. Sources say Musk is also likely to announce plans to start satellite-based broadband services in India using Starlink, which is in the final stages of getting a license.
Postman, an API collaboration company, has acquired Orbit, a tool developer that companies use to grow communities. At Postman, the Orbit team will help build community features into the Postman public API network so that publishers and consumers can actively collaborate.
In a major reshuffle at Cult.fit, co-founder and former CEO Mukesh Bansal has been appointed as the new executive chairman of the fitness unicorn. Meanwhile, head of fitness services Naresh Krishnaswamy has been elevated as the new CEO of the company.
WhatsApp is testing its large language model-powered chatbot Meta AI with users in India and some other markets in an effort to tap the massive user base to up its AI offerings. In addition, the company will launch Llama 3, its next open-source large language model, in the coming month.
Cathie Wood's ARK Investment Management has announced it holds a stake in OpenAI. The AI startup is now 4% of ARK Venture Fund, just behind Anthropic.
Those were the headlines we've been tracking for you this evening. Cloud-based restaurant technology solutions provider Posist has rebranded to Restroworks. This new identity, the company says, reflects its transformation since its inception in 2012 from a point-of-sale provider to a unified technology platform serving global restaurant chains like Taco Bell, Subway, Belgian Waffle Company, and groups like Dabur, ITC, and Reliance across multiple formats. To elaborate more, joining me now is Ashish Tulsian, the co-founder and CEO of Restroworks. Ashish, welcome back to Startup Street. First, tell us what is the reason behind this rebranding? What does the new brand name symbolize and the impact you hope it makes? Tell us what is the renewed purpose?
Shruti, thank you. Thank you for this opportunity. It's a great day for us. So I think in every startup's journey, you wish that someday you're going to outgrow your own self. And that is exactly what happened with us. What started as a point-of-sale solution company and hence called Posist in 2012, I think over time, we became a full-stack restaurant tech. So as we started working for startups, restaurants billing software, we started automating their kitchens, back-end inventory control, recipe control. We started integrating, services like Zomato and Swiggy all across the board to bring everything that a restaurant chain requires to run their operation. And over time, we realized that we are not a POS anymore. And so does our customers, want to hear more from us. They want us to build more that can power their chains. So this renewed purpose with Restroworks is that it encompasses everything that happens within the realm of a restaurant operations. And our objective with this new brand is to look at restaurant industry as a whole and not really just a piece of their operations that we can power.
Okay. So Ashish, as you progress with the new brand identity, talk to us about your tech edge. What are the new offerings for your clients? How are you staying ahead of competition?
Actually, I think it's a new paradigm in the restaurant tech. So restaurant tech has been fragmented in the sense that a restaurant chain ends up using multiple different softwares to power different parts of their operations lifecycle. So you do a billing software, you have a different software for inventory control, you have something else for integrations. And for each piece, each type of operation that a restaurant wants to manage, there is a different product in the market. And then these products in this new age of technology, they have to integrate with each other and they have to talk to each other to make it successful. For us, it's a shift where it's a single platform today that goes into a restaurant chain and replaces almost every piece of the software they use. So the brands that you introduced us with, Taco Bell, Subway, etc., when they work with us, we are the single platform that binds their operation from end to end.
Okay.
And technology edge is exactly that, where they're able to make sense out of their data. They're able to take decisions quite fast. there is no lag between their action and their
Sure.
decision.
Okay. Ashish, you've achieved over 80% year-on-year growth, and you are currently powering 20,000 plus restaurants across 52 countries. So first tell us what has led to this bullish growth, and then what are the future growth and revenue targets?
I think I cannot take full credit for this growth because I think COVID was a great driver in that.
Yeah.
Of restaurant has become technology first over the last couple of years, and that has fueled a large part of this growth. But we were also the right platform poised for to get this growth in. Restaurants are becoming technology first to the extent that over last like up till 5 years back, when we used to go to a restaurant, technology was just a want. They wanted to do better. Today, when a restaurant owner or a restaurant chain starts, technology is the first thing they want to get in. So our plans are very, are similar. We are experiencing some massive growth across the world right now. We have customers in 52 countries at this point in time. And I can tell you, Shruti, that probably for the first time, we have seen the world has truly leveled.
Yes.
Two types of restaurant chains across, the world are looking for the same solution at the same time.
Okay. Ashish, over the last 5 years, you've significantly invested in expanding your global presence in the US, Middle East, Latin America, and Southeast Asia. So give us a sense of what are the top markets and the kind of demand you're seeing there, and what is the revenue mix between domestic and global markets?
So our top markets remain India, followed by Middle East, and within Middle East, we are talking about UAE and Saudi Arabia, though we have, customers all across Middle East. This is followed by Southeast Asia, US, and then Latin America. Within Latin America, we work with Mexico, Colombia, Chile, and a few other Spanish markets. Revenue mix should be that, India remains around 25 to 28% of our revenue as of today.
Okay.
Rest of the revenue, almost 72% is global.
Okay.
Out of that, 45% is contributed by Middle East markets, GCC region.
All right, Ashish, unfortunately, we've run out of time, but many thanks for joining us on Startup Street, and we wish you the very best with all your growth plans and, of course, the rebranding.
Thank you. Thanks a lot.
Okay, moving on, housing finance startup Nivara Home Finance has raised $10 million from Baring Private Equity in an entirely primary round. The company says it's going to use these funds to drive its growth and expansion plans. Now, founded in 2015, Nivara Home Finance is focused on providing affordable housing finance to micro entrepreneurs and salaried customers and has assets under management of more than 500 crores. So to give us an insight into this funding and the company's plans ahead, joining me now is CV Rao, the MD and CEO of Nivara. Mr. Rao, welcome to Startup Street. Thanks very much for being here. Tell us about this $10 million funding from Baring. Is it a strategic partnership? Would Baring also be getting a board on your seat?
Thank you so much, first of all, having me on this fantastic show. Yeah, it is. There is a board seat for Baring. Baring, has been there for more than 2-3 decades in a private equity space. We are proud to have them as a partner. And this is going to spur the next phase of growth in the coming years and probably decades.
All right, a board seat for Baring with that. You see the proceeds are going to be used to drive the growth, to drive the expansion. If you would detail these plans for us, what is expected specifically in the coming year or so?
It's predominantly going to be expanding into the existing markets as well as expanding into other states. But currently we are operating in 5 states, 4 southern states excluding Kerala and then Maharashtra. And we believe currently as of now we have about 63 branches in these 5 states. And the next phase of growth comes predominantly in the penetration of these existing markets as well as 60 branches can go to 200 branches in the next 3.5 to 4 years.
Okay, 63 to 200 branches in the next few years. Your home loan ticket size is quite interesting at 5 to 7.5 lakh rupees. Typically, we see banks or NBFCs catering to customers with a much higher base. Tell us the market opportunity in this particular segment and what sort of growth rate have you been seeing here?
In fact, this is our niche segment where we are specialized. You don't find most of the housing finance companies in this ticket bracket. Either you find upwards 9 lakhs or below 3 lakhs. And to that extent, we see a fantastic opportunity. If you see, most of the demand is coming from lower income segments and economically weaker sections. We predominantly concentrate on these lower income segments. Here, the interesting aspect of it is most of my customers, they pre-own the land, either through inheritance or they would have acquired a piece of land, say 600 square foot, 1000 square foot, few years back. That's where, to that extent, in our loan to value ratio, predominantly land is already pre-owned, and then we only fund part of the construction. We are predominantly in the self-construction space. That's the beauty of this particular entire space, affordable housing finance. So we are purely affordable housing finance space.
Okay, you built an AUM of 500 crores. What are you expecting for FY25? And are there certain pockets where you're seeing stronger credit demand across these 5 states that you're present in?
In fact, across the states, there's a perennial demand to the extent the segment that we operate in. This 500 crores AUM has come from close to 10,000 set of customers. And the next 1 year, and we surely aim to almost double this particular both AUM as well as this customer base. Not necessarily that double this, but almost there. We are trying to. Now that the capital has come in, and that strengthens our liability profile as well. We have 25 lenders lines from. So this also helps in terms of building up the next phase of growth.
All right. You said you're looking to expand your branches to 200 from 63 currently. Just tell us, what is the significance you see of digitally acquiring customers, or is that not something that you're seeing in the segment that you operate in?
That digitally in housing finance space is a bit difficult at this stage because most of the land records are still not at digital, and there's a lengthy process as far as the customer onboarding is concerned. Customer you can onboard, but still the vetting of property as well as the customer credentials in terms of we do background checks in the customer since we operate in an informal segment. Informal means basically small vendors on the street vendors are housemaids or drivers or grocery stores owners or electricians or carpenters, this kind of a segment. It's very difficult to underwrite their incomes. So we have to assess their incomes. So to that extent, we have to conduct also background verification checks. So digital, you can onboard the customer, but still the lots of processes that are involved in the housing finance space, it takes a longer time to completely digitize those operations. To that extent, it's a brick and mortar model in
All right,
the coming
Mr.
days for the next 3 years.
Okay, Mr. Rao, thank you very much for joining us here on CNBC TV18. That's all the time we had. Pleasure speaking with you. Thank you.
Thank you so much.
Well, with that, it's time for us to head into a short break. But coming up, we take you through Bengaluru's ride-hailing startup Shoffr's fundraising journey, how the startup is capturing the premium cabs market share and its expansion plans. Stay tuned.
Well, there's a new electric ride-hailing startup on the streets of Bengaluru. And if you haven't already seen these black SUVs zipping across town, here's one right behind me. Now, Shoffr recently raised $1 million, but not through a venture capital or a private equity firm per usual, but through a user-only community investment route, which is sort of rare for India. And this is the company's first fundraise since it was founded in November of 2022. So to tell us more about the company and how it plans to take on this competitive ride-hailing market in India, I'm going to be speaking with its founder and CEO, Vikas Bhardiya. Vikas, thank you very much for speaking. Welcome back. You're watching Startup Street. Now, electric ride-hailing startup Shoffr recently raised over $1 million from its users to expand its teams and offerings as it looks to make a mark in this competitive space. I caught up with its founder and CEO, Vikas Bhardiya, to talk about this funding and its roadmap ahead. Take a look. Well, there's a new electric ride-hailing startup on the streets of Bengaluru. And if you haven't already seen these black SUVs zipping across town, here's one right behind me. Now, Shoffr recently raised $1 million, but not through a venture capital or a private equity firm per usual, but through a user-only community investment route, which is sort of rare for India. And this is the company's first fundraise since it was founded in November of 2022. So to tell us more about the company and how it plans to take on this competitive ride-hailing market in India, I'm going to be speaking with its founder and CEO, Vikas Bhardiya. Vikas, thank you very much for speaking to CNBC-TV18. It was hard to find you, but I'm glad we finally did. Just start by telling our viewers what Shoffr is all about, the pain point that you're solving for. Interestingly, in your LinkedIn post, you said it's not just a startup, and you've been doing unconventional things from the get-go. What is that? What are you doing differently?
So Shoffr is basically a premium taxi service. We are trying to build the gold standard of rides, and what we mean, Shoffr stands for essentially high quality service, which means that some of the issues that a bunch of users face otherwise, like high cancellations or poor car quality or the AC is not working, those are things that aren't there at Shoffr. And our goal is to provide users with a delightful experience. Like, for example, we can't change Bangalore traffic, but we try and make it as comfortable as we can.
What about surge pricing?
So fares are fixed, it's flat 24/7. So from the same point to airport or, all of that stays the same 24/7.
Tell us about this funding. It's quite interesting. You only came into being a little over a year ago. There's no marketing per se. You operate with less than 10 people. How did you go about raising $1 million?
We got lucky in some ways. Our users loved what we have built. So we had a lot of interest from our guests who reached out and asked if we had any plans to do something like this. And while that had been going on for a year, it took us some time to build out that conviction in what we were doing and the opportunity ahead. And when we did reach out, when we did decide to do this, they were the first people we thought of because we would like them to also participate in all the wealth creation that Shoffr will engender. It's kind of like saying thank you for helping us grow from where we started, which was with 2 cars.
How exactly are you going to deploy this? You started with 2 cars, but now you're at 75.
Right.
What next? I mean, what are your plans to expand?
The first expansion that's required is that of the team.
Yes.
We have, we are still, as you said, less than 10 people, and we have a a lot of things to build out before we start expanding to other markets. So the first main focus for the next few months remains in building out a core team.
Okay. So most of the money that you raise will be spent towards?
It will be spent towards, hiring of people and working on a few partnerships that we have in mind. But we are not in a rush to spend that money.
I read your post and you said Shoffr is already profitable. And you're generating $1.5 million of annual recurring revenue currently. At what pace have you seen this growth, and is this likely to continue over the next year or so?
I hope so.
Well, what are you doing to make sure it does?
I mean, everything we do, we think of it from like an overall business perspective, right? So like while we do want to get to like, let's say 100 million ARR in like a few years time, there are ways to get there. And right now we think the best thing for our best use of time and capital is to focus on building out a team. So that is the first thing that we are doing to get there. We ended we did the first 6 months of operations, which was the first, from November to March 2023, we would have done some 33 lakhs in revenue.
Okay.
And now we are like, touching the number that you quoted.
Well, right now you're very much in Bangalore. You did tell us that you plan to expand. What are these cities that you're eyeing, or any plans you could share with us?
I wouldn't want to be honest.
Okay.
But we do have 2-3 cities that we are scoping out.
Okay.
Don't want to just bet on one yet and say that. But it's fair to say that we have to build out a team first, and then Bangalore, we've already established ourselves a fair amount, and there's a lot of scope here itself. So it makes sense for us to go a bit deeper while exploring other markets.
Currently, you have these 75 cars, and your tie-up is with BYD through Ref, and of course, who's been financing you. Are you exploring other partnerships, or will your future cars also come from BYD?
I mean, we are exploring. We constantly explore other partnerships, to be honest. Any new EV car that comes out, we kind of go out and test it out. As of now, we feel like BYD E6, the car that we use, serves the best. It's like the best fit for what we are trying to build. In terms of, Refin has been a great supporter for us throughout, but we do have other partnerships there as well with a few banks.
What would you say the size of the opportunity is? Because what you're operating in is not the typical mass ride-hailing market. You're offering a more premium service. Let's say your competitor, the likes of Blue Smart, they're operating with 100 times the number of cars. They have more than 7,000 in their fleet. You're working with 75. So what is the opportunity you see, and what share of this market do you think you'd be able to capture over the medium term?
Right. So, I mean, as you said, like ride-hailing is like a very huge segment, right? And that overall segment is probably north of $10 billion in just India. And that's just the B2C market. There's a whole B2B market. So when we look at it as like the premium segment, or the value for money segment on the B2C side, which is honestly a very large opportunity. Like I would say at least more than half of ride-hailing would fall in that category. Not necessarily in terms of the number of trips done, but in terms of the revenue. Outstation is the huge category. Rentals is a very big category, especially in the B2B world. And airport transfer markets, while they dominate the revenue line in terms of the ratio of the rides taken across all of the aggregators and other companies in this space. So that opportunity is quite big. I would say at least $4 billion to $5 billion. And it's going through a very interesting shift because of the EV transition that the whole country is experiencing.
Every ride-hailing startup is talking about Vikas, and we wish you all the very best with it. Thank you very much for your time.
Thank you.
All right, moving on. It's Friday, and it is time to dive into the startup funding landscape. According to data from Venture Intelligence, this week, Indian startups witnessed 9 deals worth $67 million. Let's take a look at some notable deals. First up, AI SaaS platform Nesa bagged $20 million from Matrix Partners India, Nexus Ventures and others, while compliance automation platform Sprinto also got $20 million in a Series B funding from Axel India. B2B waste management marketplace Recycle raised $13 million from 361 Asset Management. Not only that, AI-based sales enabler GTM Buddy secured $8 million from Leo Capital, Stellaris Venture Partners, and others. Last but not the least, eyewear seller My secured $2.5 million. In 2024, so far, Indian startups have witnessed 241 deals valued at over $2.31 billion. With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.